Today's video was requested by Mark, who has 2 questions regarding trusts and life insurance. He asks, what are the pros and cons of putting our policies in a trust, and should the beneficiary of the policy be the trust? In order to put a life insurance policy into a trust, the trust must become the owner of the policy. For a new policy, this is as simple as naming the trust as the policy owner during the application process. For a policy that is already in force, a change of ownership must be completed. This involves an ownership change form where the old owner relinquishes ownership rights of the policy, and the new owner, in this case the trust, agrees to assume those ownership rights. A certificate of trust will be needed, and the trustee of the trust will need to sign on behalf of the trust. Here are 3 things to consider before placing your policy in a trust. When a policy is in a trust, the trustee must sign for all policy-related requests. This might not seem like a big deal, but for someone who goes from owning a policy as an individual to having their trust own the policy, this extra moving piece can be somewhat annoying. Some trusts are not set up to favor life insurance. It would be important to review what authority is given to the trustee surrounding life insurance matters before transferring a life insurance policy into a trust. Some people place life insurance into a trust in an attempt to establish some type of asset protection. We do not have credentials to give legal advice, but if putting life insurance into a trust is part of your asset protection plan, we would encourage you to discuss this with an attorney who understands asset protection. There are good reasons for a trust to own a policy, but for most people, naming your trust as the beneficiary of your policy and not the owner is going to give you the results you want. Which brings us to the second question. Should the beneficiary of the policy be the trust? For most people, yes, having your trust be the beneficiary of your policy is a great option. Before naming the trust as your beneficiary, we would recommend you make sure it is set up to disperse the funds according to your wishes. Then, if it's a new policy, simply name the trust as your beneficiary during the application process. If the policy is already in force, you can change the beneficiary of the policy to be your trust with a beneficiary change form. One more thing on the subject of trust and life insurance. If you have named a child as the beneficiary of your policy, and a claim is made while the child is still a minor, the insurance company will not be able to make a payout to that child while they are under the age of 18. This doesn't mean the insurance company won't pay a death benefit, it just means they cannot legally make the payout until the child reaches age 18. In such cases, the insurance company may hold the funds in trust until the child reaches age 18, or they may require a custodian to receive the funds on behalf of the child. Naming a trust as your beneficiary would eliminate this situation. Funds can always be paid out to a trust, and then the trust can distribute the funds according to the terms of the trust. Naming a trust as your beneficiary is also a good way to provide for those with special needs and for those who are unable to make good financial decisions. Those are good questions, Mark, and we hope this gives you something to think about as you consider trusts and life insurance. At McPhee Insurance, we always welcome your questions, and we love it when people ask us to cover specific topics. If you have a question or topic you'd like us to discuss, send us an email, team@mcpheeinsurance.com.